10 interest rate rises. That's what we've had, and that was expected to crash the market by 20%, 25%, or even more, if you believe the headlines. But that hasn't happened. Instead, something else quite unexpected is happening as a result of these interest rate rises. So consider this episode a fact check, a warning about what's expected to happen to the property market in 2023 and beyond, and how you can come out of it on the right side. Hi, it's Nero here. And as I said, the Reserve Bank of Australia, the RBA, has given us 10 interest rate rises since May 2022. But rather than affect mortgage holders and home owners as much as what the doomsday folk expected and predicted, it's actually affected buyers. You see, since May 2022, the rise in interest rates by 3.5% has actually diminished most people's borrowing capacity by 30%. This means that for someone to be able to afford the same kind of property they were looking at before these interest rate rises started, property prices would have had to drop 30%. And have they? Not even close. Have a look at this. On this chart with data from CoreLogic, what we can see is that from January 2021, house prices in Sydney rose about 30%, then they have dropped about 10% and now started to rise. In Melbourne, we can see that property prices rose by about 12% from January 2021, but unfortunately, poor Melbourne, it's the only city that has given back all of its gains since the pandemic started, so prices are roughly where they were back in January 2021. For Brisbane, you can see the property prices started to rise before January 2021. They started to rise really in sort of the second half of 2020 and rose an astonishing 46%. Then they have dropped slightly, but you can see that we're starting to get some consolidation again. So if you're thinking about buying in maybe Sydney or Brisbane based on that data from CoreLogic, it certainly looks like now is a great time to buy. But how can this make sense? I mean, if borrowing capacities have dropped by 30% on average, what is it that's keeping a floor under property prices, and in fact in some areas forcing property prices to rise? To answer that, let me ask you a couple of questions. Number one, have you seen any articles like these talking about builders going broke? Do you know a friend or someone close to you who wanted to have their home built and were told, oh, it'll be built in 8 months, and now nearly 2 years later, they're still struggling to get their home completed? Do you know of anyone who was told, oh, it'll cost you X to build your house, and then during the construction period, the builder kept coming back to them, asking them for more money because construction costs were increasing? Almost all of us have, right? And this is causing a triple threat. Firstly, construction prices are rising everywhere, even in places where property prices are falling. And so people are having to pay such a premium to get a new house built that they're finding it's just not worth it, and they're often pulling out of new builds. Secondly, even if they're not too worried about the higher price, they're worried about engaging a builder, going through a construction process, and then being left high and dry halfway through the process because their builder's gone broke and now they have a house that's half completed. And thirdly, even if they're not concerned about any of those two things, they don't have the borrowing capacity to pay the premium to get their new house built. As a result, fewer and fewer people are looking to get a new property built. That's resulting in less approvals, and that's affecting the oncoming supply of property in Australia. Have a look at this article again from March 2023. Rents to rise as building approvals hit decade low. Building approvals slumped to their lowest level in a decade in January, fueling the risk of further rental inflation as immigration numbers return to more normal levels. The number of standalone home approvals dropped 13.5% in January from December to a seasonally adjusted 7,664, the lowest monthly total since June 2012, as buyers pulled out of the market in the face of rising interest rates and surging construction costs. Now think about this. This is the lowest monthly total since June 2012. That was nearly 11 years ago. And think about how much more our population has grown since then, and yet we're building less properties. The article then goes on to say that the Australian Bureau of Statistics figures on Thursday show the pipeline of houses is also set to slump, reflecting warnings from industry bodies that new supply will plummet when the current wave of work completes. So if we have fewer building approvals, that means that we have less supply, less housing supply coming onto the market. But we already have a supply shortage. We have a housing crisis, right? That's part of the reason why rents are so high in Australia and set to keep rising. Have a look at this. No light at the end of the tunnel. Rental vacancy rates hit record low. Tenants are struggling to find affordable homes amid Australia's rental crisis, and experts fear the situation could worsen as the number of vacant rentals drops to record lows. Rental vacancy rates reached record lows of 0.8% in Melbourne, 0.9% in Sydney, and 0.6% in Brisbane last month. Domain's Chief of Research and Economics, Dr. Nicola Powell, said the rental crisis was a result of reduced new housing supply and investment activities, plus some other factors as well. But she then goes on to say, we haven't had enough investment activity. We haven't been building enough housing. And then on top of that, we've got international students and migration returning now. So rents are going to keep rising. And the numbers get quite scary when you look at the 2022 federal government population statement. As you can see from this table, just looking at net overseas migration, which I've highlighted, in the 2021-2022 year, we were expecting 150,000 people to come to Australia. But from 2022 to 2023, that number is expected to increase to 235,000 migrants, and that's expected to continue for the next few years as well. And if that number is accurate, and we are expecting 235,000 people on average per year, where are they going to live? Because at last count, we only have about 40,000 homes available nationwide for rent. So yes, rents are going to stay high, and they're going to continue to stay high. We're just not going to have enough properties for everyone who wants a place to live. And in my books, that's a disaster. All of us deserve to have a roof over our heads. But from an investment perspective, you can see that rents are going to keep rising. And as you saw from the previous chart, property prices are certainly starting to stabilize. And many agents, both in the media and agents who I'm talking about, are very confident. There's a lot more optimism and enthusiasm when I speak to them. Some of them are even speaking about record months. But again, how can this be? If borrowing capacities, as I said earlier on, have dropped by an average of 30%, how come property prices haven't dropped by 30%? I mean, it makes sense, right? If someone who can afford X and then their borrowing capacities drop by 30%, and this is reflective of many people around the country, then surely property prices need to drop by 30% as well to maintain equilibrium, don't they? Well, that's the argument of many doomsday people, but unfortunately, they've been proven to be categorically wrong. Here's what they've failed to take into consideration. Number one, there are over 10 million households in Australia, and of that number, over 4 million have zero mortgage. So that means that 40% of Australian households have zero debt. So when they look to upgrade or move houses based on the fact that they have so little debt based on their assets and income, that the drop in average borrowing capacity has had little to no impact on them. That's why it's the top-end properties, especially in Sydney, that are driving property prices higher while interest rates remain high. Secondly, many buyers have cottoned on to the fact that it's cheaper to buy a fully renovated, schmicked out, really nice home as opposed to buy a brand new home that needs to be built. That means that for those buyers who are able to afford a property, even though that number might be less than it was, say, a year ago, they are still willing to pay a premium for top quality homes, which is starting to drive property prices higher. As any good agent will tell you, you only need 2 potential buyers bidding on a property at auction to drive the property price higher. Thirdly, and this is something many people are missing, is that because borrowing capacities have dropped by so much, many buyers who can now no longer afford to buy their dream home in Sydney, Melbourne, for example, they're moving to smaller capital cities. They're moving to larger quality regional areas, and that's driving property prices in those areas upwards. In fact, when I speak to many agents in these areas, when I'm looking to buy properties for clients, their biggest complaint is this. They say they can't get enough properties for the number of people who want them. So the fact is that in some of the more expensive pockets of our bigger capital cities, property prices are starting to turn around. And in many areas around the country where property prices are, say, below $600,000, those areas are continuing to rise month on month. And that's happening while interest rates stay high. But what happens when interest rates start to drop? And there's plenty of proof that suggests that interest rates could start to drop by as early as the end of this year or certainly next year. I'll talk about that in a future episode. But what do you think will happen when interest rates do eventually start to drop? Well, number one, you're going to see their borrowing capacities increase. Number two, you're going to start to see buyer confidence increase because the uncertainty around interest rates is now gone. And number three, then you're going to start to see more demand come back into the market as more and more buyers can start to buy. But you can't build a stack of properties overnight. We already have a supply shortage. We already don't have enough properties, as I mentioned earlier on. So when demand then starts to increase, what do you think that's going to do to property prices? Now, it's not going to increase them everywhere, so you will need to do your due diligence. But I strongly believe that in many areas around the country, you're going to start to see property prices rise. And that's why I, for one, am buying very, very aggressively right now. Many of our clients are returning for property number 2 and property number 3. I mean, after all, they saw their properties rise in value during 2022 when the mainstream media was all talking about doom and gloom and property prices falling. And now they can see the opportunity and they want to get ahead of the curve. So to you, here's my suggestion. Ask yourself this question. If we're not building enough homes, and more people are coming into Australia, all needing a place to live. Now, of course, many will need to rent, which is going to drive rents higher, as I mentioned earlier on. But some will be able to afford to buy. What is likely to happen then to property prices when interest rates stop rising? In my opinion, you could be in the ideal situation where you could buy in areas where property prices are set to rise and rents are expected to rise, which will give you both capital growth and cash flow growth. Are you going to miss out on that and look back with regret? That to me would be a disaster. I'll see you next time.